Welcome, guys, to another episode of Flipping Miami. I am your host, Raul Balufe. Today, I got another virtual guest, Gary Boomershine. He's pretty much been in the game for longer than I've been alive, and he's just been. I had a long chat with him in a mastermind that I was, and I was just amazed of how he started with like these seller finance deals. Like he started doing real estate with seller finance deals, which some of us think about that is like the most impossible thing to do, terms and things like that. And Gary has evolved and he's done tons and tons of deals. He now owns a company called REI Vault, or now it's called realestateinvestor.com, where they do mark other people. He has sent millions and millions of pieces of mail. Owns properties, his wholesale properties, works with wholesalers, investors, his own podcast. So Gary is a wealth of knowledge, and I'm honored to have him again on the show. He was at my first episodes probably like a year or so ago, and I enjoyed it very much. So definitely check that out. But Gary, dude, thanks for coming on, brother.
Yeah, man. It's really, especially with what's going on around the country, I've been calling it the cerveza bug. Because actually, if you actually talk about COVID and anything negative that doesn't align with the agenda, you get shut down on YouTube. So cerveza bug, if I refer to it, I'll just be talking cerveza bug. But anyway, it's great to be here, man. And this is a really interesting time to be, whether you're a real estate agent or a real estate investor. And actually, a lot of us, man, we've been waiting for this. This is you buy when there's panic in the streets. And I'd love to be, have some dialogue on where the market's going to go and where the opportunity is. During these periods, this is the biggest transition of wealth. These turns, these market cycles are where there's a massive transition of wealth. Almost all the multi-billionaire families have made the money in these turns. And I think that if we're on the right side of the curve and all of us are pivoting properly, this is going to be a really great time. And so I'm excited about today's call.
Love that, man. Yeah, and just before the call, I was talking to Gary, and you'd be like the perfect person to ask about what's happening as far as marketing in the market. So on this episode, I want to go over what Gary sees for the future of real estate, or the near future of real estate, given the pandemic. Also, what is going on with marketing right now, and what can be the future of marketing? Because we all know that this business is marketing and sales and operations and all, but overall marketing and sales. And Gary's just a wizard of that. And he's, I know you have a sales course and he does a ton of stuff with sales, so we might be able to touch on that. But Gary, man, I know this is crazy, and you see a ton of investors. Like you said, I don't know how many pieces of mail and how many investors do you help out right now with like the marketing and all these types of things now?
Yeah, I just pulled. I was actually on. We have a Facebook group right now called Real Estate Investor Beacon, and it's just free content for people we're trying to make, how do we make this market? And what are we doing to change? And so, I just pulled the numbers on our marketing. We've done over 50 million pieces of direct mail for, a group of us around the country. I managed that marketing for, I think we have about 1,200 clients, realestateinvestor.com clients. We've done 3.5 million outbound phone calls. I have a phone team that does a combination, mostly follow-up, which I definitely want to touch on today.
Yes.
The follow-up of the leads is where the business. That is the crux of how to make money off of marketing. And so I have a team that does that in cold calling. And then recently we merged our business. There was a really, really great technology company. I know you know Robert Seifert.
Yeah. Really
about a year ago, we connected and it was like peanut butter and chocolate. We had an incredible capability. I've got a staff of about 110 people, and he had a couple of products, one called Investor PO, which is a software platform for follow-up, on steroids. And then he had Property List Manager, which was data stacking and skip tracing, which is really how do you pull the best names and addresses and do all the magic to get the the right stuff. So we actually came together, and it's all under realestateinvestor.com. But, yeah, man, here's what I'm finding. I am finding that people right now, there's two camps, going on with COVID. You've got one camp of people, and I like this, is that they're totally freezing up. They're glued to their TVs. They're in panic mode, and they're watching, I call it the fear porn on, CNN and Fox. It's like you can't go there. It's like, you have an anxiety attack. It's like the world's falling apart.
Yeah.
But most of us that are, doing this business, we are doubling up on marketing. We're finding this is not a time to stop, because if you don't do marketing, you have no pipeline. And if you stop doing marketing today and you stop your business, like in 3, 4, 5 months, your business, you're done. And so a lot of us right now are doubling up. We're one of the key things we're doing is we're finding that we're going back to the old leads. I mean, this is if you don't have a lot of money, you don't want to market right now. It's like, go back to your old lead pool, because there are a lot of people right now that were in the happy days, the unicorn days, the prices were going to continue to go up and people were not motivated. And there's a massive amount of motivation right now. There's a lot of people, a lot of what I call these burned out landlords that are not getting rent and not getting paid. There's properties that are all over the country that people are now starting to say, man, if they get a call from you, they may have said, hey, I'm not interested 3 months ago, and they're suddenly starting to be interested. So those are the best leads, going back to the old leads, getting them into a follow-up system and interact with them. And you're going to pop out some deals right now.
Love that. Yeah. I've always had like a follow-up system, and I would love to hear kind of what you think and what your follow-up system looks like, or what the most successful investors do. Kind of what we do is basically, our top sales guy, we will do like an hour, about 1 hour and a half on a triple dialer of our hot database, every morning, basically Monday through Friday, and Saturdays, of course, maybe a little bit. Basically 6 to 8 hours a week on the dialer, just literally hitting every follow-up thing. And then once a month, we'll just text whole list or RVM or whole list. I think at the very minimum, you should be doing some kind of variation of that. I mean, how important is follow-up in general, and how even more important is follow-up right now?
It's the entire business. I want to give some interesting statistics. And we've done 50 million pieces of direct mail, and I have every response rate. I mean, we track since I've been doing this for almost a decade. Let me just say a couple things. One is, this is a Harvard review. This came out of Harvard. This was for the real estate market, but actually it transitions to almost any marketing that we're doing direct to seller. 90% of all the profits, 90% of all the profits come after the sixth contact or interaction. 90% come after the sixth contact, and less than 10% of any investor or realtor follow up more than twice. Okay.
Wow. Well, that's one, less than 10 of what?
Less than 10% of investors in the country. So what happens is people expect, and here's another interesting thing. It's actually less than 3% of the profits come from the first call. So
less than 3% of the profits come from the first call. That's right. That's a powerful fact.
So you do a bunch of marketing, and we can talk about the different kind of ways. There's lots of different ways to do marketing. Direct mail, right? Cold calling, text broadcasting, where you drop a bunch of phone numbers into an into a text system, and then blast them and just follow the laws, right? There's RVM. There is pay-per-click and, organic search. So all the online sources. So just to name a couple. And a lot of people have been working just the initial lead. So the lead comes in, or the initial phone call comes in, And boom, those are the ones that they do. That's a proven 3% of the profits. So 90% come after the 6th interaction, and most people are not doing it. Everybody knows follow-up's important. The reality is most people don't do it because it takes a ton of work. Excuse the language. It's right. It's kind of like, so now here's a couple of other things. On marketing for direct mail, typically it's 20 to 40 leads. And I've been telling everybody, like, typically I say, even if you're not very good at sales, it's really 45 leads. Just plan 45 leads to get a deal. Now, in the definition of a lead, we call that somebody that's coming to us, whether it's just somebody dials the phone number or they opt into your website. It's a unique hit. That's a lead. So 45 of those to close a deal. And what we find is about 1/3 of 45. So about 15 of the 45 are going to be any good. The other 30 are going to be like, not interested, take me off the list. All the angry people. So first off, somebody has to filter through that. Just that alone is a lot of work, right? And then you got the 15 left, and you got a lot of tire kickers. They want full price. They want to just mess with you. And so now you're going to whittle it down to probably 7 that are any good. And those you got to go out on appointments or do the phone interaction, and then you close 1. That's about the math. Now, then it's, 6 contacts. What is a contact? It's like, hey, the lead comes in. We need to send them a text message. We need to then dial on the phone. Try to dial them. They don't answer. You got to call them back tomorrow. You got to call them back the next day. Then finally they answer. They're like, hey, call me back next week. I'm not ready to sell. So there's an interaction. If you run the math, it's somewhere between a deal. It's an average of like 225 to 600 times that you've got to like interact with these people to get the deal. So you want to automate. You want to automate as much of that as possible. And so a lot of people will do marketing and they'll like, oh, doesn't work. My market's unique. That's not the reality. The reality is it takes follow up. And if you have it in place, you're making money. Those that are doing the follow up make money, and those that don't. And so how do you do that? Number one is you have a system that kind of filters out the leads and then automatically says, oh, here's a lead. I need to send them a text message, and then I need to push it over to somebody to call them and get on the phone, right? And interview them. And then, if they don't answer, then something goes out the next day, and you automate that whole process. And there's a couple of systems that do that. We actually built one, realestateinvestor.com. Usually those are like $100 to $200 a month. A CRM is what they call it. And then the other thing is somebody has to do the phone work. And one of the biggest holes that I see in the business is that us as real estate investors, we're trying to do all that work, right? We're doing the marketing, we're dealing with the system, and then we're supposed to get on the phone. And that's all $5 to $10 an hour work. And it's like, okay, if you're a real estate investor and you're doing $5 to $10 an hour work, you're going to have a $5 to $10 bank account. So you really want to have leverage and use other people to do that for you.
Yes. Love that. Yeah. I mean, kind of what Gary's mentioning is like, it's so important that you understand, because if you're listening to this, you want more leads. If you're listening to this, you want more business, you want to make more money. And a lot of times the gold is in the leads that you already have or the leads you're already producing. You're just probably not hitting them enough in enough different ways. Like Gary mentioned, text messages, phone calls. I remember from one of the first meetings I met you, Gary has a pretty cool, follow-up mail process. I think that you send, every couple of months or so. So there's a lot of ways you got to hit these clients over and over and over. And Gary, so we know like all the direct marketing, let's say, people listening to this are doing, direct mail or a variation of cold calling or texting, whatever. What do you see as like the future of marketing as far as like for our business? Do you like, when I say future, let's say 1 year from now, given that this crisis ends, probably going to start seeing the backlash thing, maybe 6 months in a year, we start really seeing some differences in the market. Which marketing channels would you say would be where people should focus attention on?
Yeah, Great question. So I want to answer that first in terms of the really, if we look at a real estate cycle, because this will make a lot of sense as I go through it. But real estate has been a 7-year cycle for 100 years. It just happens that this last cycle is the longest we've had in 100 years. We're at like year 12. Every cycle has almost looked exactly the same. And at the end of the stage, we just came out of one of the hottest real estate markets, right? And it's euphoric. So massive competition. Everybody's jumping in. They got the late night TV commercial guys. They're teaching people how to do real estate. So massive competition. Then what happens at the end of the cycle is we're going to see a massive backlash. Right now, I don't have a crystal ball, but the unemployment in the last cycle, I was just looking this up. In the last cycle in 2010, unemployment peaked at 14.5 million. Today, 10 years later, we are already over the 30 million mark. Wow. So in just 6 weeks. So we are double the unemployment. We're on full lockdown, right? There are going to be massive carnage. A lot of the money that was competing against us real estate investors and agents was the whole iBuyer market, right? Zillow, Opendoor, OfferPad. That was $3 trillion. And a lot of that money is now gone. So disappeared. So the sellers don't have those options. So we're going to see over the next really 6 to 12 to 24 months, we're going to see, I predict, a fairly substantial decrease in home prices. We're going to see a lot of inventory, ultimately a lot of properties going back to foreclosure and back to the banks. That's always what happens. So real estate becomes ugly. And so where is going to be the deal flow in really 12 to 24 months? A lot of that deal flow, just like it was in 2009 and 10, is not going to be going direct to the seller. A lot of it is going to be going back to the bank, right? So people are going to be on the MLS. They're going to be buying at the auction. Just like in 2009 and 10, nobody was doing direct mail and cold calling back then. So the people that start doing that again are going to have a heyday. So the response rates go up. The deals become pretty hot. Right? And so we're starting to see that right now. A lot of people, like, I was actually on a call with Trevor Mock, who owns Carrot website.
Yeah, very smart guy.
Yeah, awesome guy. He was actually showing his metrics on what's happening on web traffic as an example. And really interesting. We're seeing it off of direct mail. We're already seeing the response rates starting to pop up and go up.
Yeah.
We are seeing a better connection and conversion rate with the sellers, because the sellers are home, right? Before we would be calling them all day long, and now all those sellers are not at work. They're actually at home. And so our connection rate is higher. We're not seeing a better conversion rate yet. So we're seeing a higher response rate, which means, more people are responding to the marketing. The conversion rate so far is still flat. I think people are still trying to figure out where the market's going to go. A lot of people are living in their house and not ready to move out, right? What we are seeing is the people that have vacant houses or absentee owners, like the burned out landlords. Those are the more responsive deals right now. If the house is vacant, those are the ones that are selling. If people are living in them, we're seeing, it's a little slower right now.
Yeah, no, that's a really good point. And I think it's important to understand, that cycle. That I know that, I've read Principles by Dalio. I like a lot of his book. I've read his book twice, actually. And a lot of these guys and Buffett and these really smart people, they study history. They study the past. And it's not because you want to reminisce on what happened. It's because, there's a famous quote, I forgot what it is, but anyway, something like arrows on the back leave trail or something like this, basically saying that the history is almost like showing us our future. So what Gary's been like very smart to say to us right now is, dude, look at the past. Look at the last recession. It crushed us, right? It crushed the market, and it only had 14.5 million in unemployment. We're already at 30 million plus of unemployment. So we'd be stupid, sorry for my language, but we'd be stupid to think that we're not going to have any negative implications coming forward. And in marketing, basically going back to the banks, which is awesome for me because, you know, I started with the MLS. That's kind of how I started the business, bought a ton of houses that way. But also if you're direct to seller, mail, I imagine the response rates are going to come back up. I remember like the old days, it was like response rate, you know, like or 5 to 7, 10% on some crazy pieces. So, I hope that gets back up there. And get like, what would you say to like the investor who's listening to this right now, or the wholesaler or the agent who's listening to this right now that's saying, Gary, I get what you're saying, but I understand that in a year, in 10 months, I'm going to start seeing some good stuff. But how do I stay afloat for this year? Like, what do I do?
Now, it's a great question. And I'll just tell you kind of what I'm thinking and what I'm coaching people and around the country on. And also this is very consistent with some of the top players that I've been interviewing and interacting with in either masterminds or interviewing them on our Facebook group, Real Estate Investor Beacon. We just had the number one guy. He's probably going to be the number one guy for Keller Williams in the country. He was the number one guy in team for Berkshire Hathaway. They did 700 transactions last year and bought hundreds and hundreds and hundreds of houses. So they basically are either listing the property or buying. And this is very consistent with them and us. So right now, today, let me just kind of walk through what I think is going to happen. This is all based on history. It's based on it's natural supply and demand, what's going on in terms of money printing, the unemployment rates. So for really right now, we're not seeing a massive change. And the real estate is always a bit of a slow process. It's a 6 to 12 to 24 month process right through these cycles. So right now, people, we're not seeing a lot. The lenders, a lot of the hard money and private money lenders are still lending. There are a lot of people that are putting, including myself. I've been lending. I actually did a loan a couple of days ago for $500,000 here in California. A lot of us don't trust the bank. So there's a lot of money flowing into lending. And as long as there's money, there are going to be buyers. All right. So in the short term, probably the next 3 months, we're going to not see a lot of change. This is really the best time from my perspective to be doing virtual wholesaling. This is a fantastic time to do virtual wholesaling. However, what we're going to start to see is we're going to start to see a drop. And I think we're going to see a 20 to 30% decrease in value short term, especially in the coastal areas. California, Florida. It's always happened historically. We saw it as soon as there's supply, right? And there's not a lot of money and the buyers start to dry up and there's foreclosures. That's when the prices start to drop. And so buying property right now is not really the best thing, in my opinion. I think there's going to be a lot of pressure. So wholesaling, virtually, especially, you can do it in any market, and starting to learn and be preparing for an incredible buying opportunity because we're going to start seeing the drop in prices and then we're going to see massive amount of inventory going to the foreclosures. So I think we're going to see as much foreclosure inventory as we saw in 2010 and 2011, in my opinion. There's going to be some massive deals to be bought. The banks are going to be taking those properties back. They're going to be unloading them. There's going to be a lot of people, a lot of institutions are going to be looking for them. And I think closer to it's more like 12 to 24 months. I'm thinking more like 18 to 24 months. I think we're going to see one of the biggest inflationary upticks that we've seen in history in terms of value. The prices, so they're printing massive amounts of money. I think the latest number I heard is $6 trillion, and it might be over $10 trillion. The last stimulus, it was like 800 billion. So the amount of money, so when the Federal Reserve, when the Fed is actually printing money, the prices of basic stuff like milk and cheese over time, the value of that dollar goes down. So those prices go up, but rents go up and the value of property skyrockets. And I think we're going to see something, and you want to be owning property at that time. So this is a great time to virtual wholesale and prepare. Also start lining up money and learning how to do private money or raise money, because there's going to be a lot of it, and learning how to do creative deals, being able to buy creatively, like owner financing. There's going to be owner financing opportunities, and preparing around that, and then taking advantage of the buying opportunity when we start to get closer to that bottom. And I think people that are buying right now are in the highest risk area of anybody. So I think people that are buying, especially just in the short term, over the next 12 to 24 months, if you're buying, as long as you're buying right, you're buying at the fundamentals, especially the linear markets, the markets that have not had the big up and down. If you're like in Memphis, or if you're in Omaha, Nebraska, but if you're in Florida, you're in California, you're taking a huge gamble, which I think the money's going to be there, but the opportunities are going to be there, just not yet, in my opinion.
That's a really good point. And it's kind of scary when you kind of put it like that, because it seems like, because right now from the outside, it's crisis and where everyone's at home. It doesn't seem as bad as the 2009 crash, but from the numbers you're saying, it's almost double so far. And we're just like kind of starting this thing, right? Yeah. Like technically in different places, the lift of being at home is be maybe in a couple of weeks or so. So people are probably taking slightly, but the economics pretty much show that this pretty huge, massive compared to 2009.
I think personally, the repercussions and the percussions of this are going to make the 2009, 2008 thing look like a walk in the park, in my opinion. Wow. They have shut down the entire economy in the entire world, right? I'm in California, so you can't, in the entire world. The trading, right? What's coming over from China right now. You got all the restaurants. Think of the restaurants that are not going to survive, right? They can't even, a lot of these restaurants, and most of them can't even survive 1 month. I was looking at a statistic, 46%. It might have actually, should pull this up. I have this right in front of me. It's either 53.
Most restaurants can't even survive in a thriving market. 53%
of all renters said they didn't have $500 extra savings in their bank account. And 22% of all homeowners didn't even have an extra half a month to pay their mortgage, an extra half a month of savings. So we've been at this now for 6 weeks. So then all of a sudden you think of the businesses that are in small strip malls and shopping centers, and they're not making their rents. Now the mortgages are going to still be due. Right? And the values of those retail properties are all based on rents. So now all of a sudden you got half the rent. That's half the value of a property, or, thereabouts. So I think we're going to see this ripple effect that is going to bring back and make real estate as a dirty word again. And that's the time to buy. That is the opportunity. That's what Warren Buffett says: buy low, sell high, don't lose investor money. Right? And follow the laws. And I think there's going to be a massive, massive opportunity, hasn't seen since in my opinion, the Depression.
It's just like it's an overwhelming to think about all that stuff. Because if you buy, I heard you say that you're buying now, it's a little dangerous. So basically, aiming this back towards I asked Gary, people who want to stay in the game for the next year to be able to capitalize on this. And basically Gary's saying is like, look, right now is probably not the smartest time to buy. I mean, that's almost common sense. Like you don't even have to.
Unless the fundamentals are there, unless you're getting a smoking deal, right? Right. And
like the numbers 60% off ARV type thing.
Right. But in California, people were buying as high as, 87 to 90% of the after repaired value. I've got friends that were in Denver that were just building their business to break even, to keep their teams in place, their contractors in place. And it's like, guys, that is a recipe for disaster. So I think a lot of those rehabbers and fix and flip, where the fundamentals were not there, are going to get wiped out. A lot of the retail buyers, a lot of the guys that were buying VRBO, right? What was a very popular area, great model, but as soon as the music ends and there's no place to sit, right? The musical chairs. But VRBO, you had a rental. Like I've got a rental property in Maui. We've had $30,000 just in one condo in Maui. We had $30,000 of cash refunds out of our bank account, money that we already collected. So imagine the people that are doing Airbnb and the home away. They've got the rental properties. That market right now is completely wiped out.
Yeah, I read a stat, actually. I pulled it up here. 700, well, I mean, don't quote me on this, but about 770,000 transactions last year for vacation rentals. 770,000 people buy houses to the intent of a vacation rental. There might be a percentage that's a little off there, here or there, but think about that. I mean, all those people are feeling it, no matter how much money you have in the bank, you're feeling it. So, I mean, this podcast, or like this, what Gary's saying is not meant to scare you. I think that now's a great time, if you're wholesaling, to get really good at wholesaling. Really good at your marketing, get your numbers tight. If you're an agent, I think it's an awesome time for you. We're still doing 3 listings a month from our brokerage, from the leads we're generating from wholesale. So I think it's a great time to list properties, do these things, put them on the market, things that don't really require a lot of your risk in cash in properties and things like that. So I think that's awesome advice. And really double down, keep your finances, stay tight. And because Gary, I know one big thing is like the people who try to time the market typically like fail. How do you think about like timing? When is it good to buy? I know that I heard you say about 16 or 18 months or so, but when do you think is there like some kind of like metric that you think about, or some economic indicator you think about?
Yeah. You can't really, you can only look at the bottom when it's already happened.
Exactly.
Right. Usually it's a 6 to 12 month window, and it's like, okay, that's where we're at. Really, where is the bottom? The bottom is typically, we're going to start seeing a lot of inventory back on the market, and we're going to see the prices drop, and we're going to start to see the foreclosure auctions. And once we're probably a couple, 5-6 months into that, that's actually going to be a really good time to start buying. When you see the inventory, what happens when we start seeing foreclosure inventory, we're going to see a lot of the lenders that were actually lending, are going to start struggling, because think of all the lenders that were lending on after repaired value at the end of the cycle, and they're the ones that get stuck. So they have big losses. They're unloading their inventory. That's a great time. So this is not a fear type of situation. This is really how to prepare. This is actually what we've been looking for. One of the hardest times to buy real estate is at the end of the cycle. It's the euphoric stage. It's when we're like, everything's super high, right?
Beautiful. Yeah.
Massive competition, very little profits. We're about to go into, and this is why I'm telling everybody that we should all start preparing, that we're about to go into one of the best buying seasons that we've had, in history. Right. And it's like, you can't have the printing of the amount of money that's being printed, right? The printing presses from the Federal Reserve and all the money they're printing. It's like, it's going to be 10x what they did in the last cycle, right? That is going to come with massive appreciation.
Yes.
And we're going to all want to own real estate. Those that have real estate are going to do well, and those that don't are going to be, that's where the middle class becomes, the separation that just disappears.
Gary, and I think you bring up amazing points there. And this is exactly why you got to follow Gary's Facebook group, and his podcast. I mean, he's talking about this all the time. And Gary, I'm just curious to get I don't want to talk much like politics or whatever here, but I think you'd be an awesome person to ask. Let's say Corona happened. How would we have reached the end of the cycle? Like we were due, right? 12 years deep when we should have been 7. Corona happened, which was like, for the sake of the argument, it was a accident, right? Okay. For the sake of the argument, pretend Corona is an accident. what do you think was supposed to happen for the cycle to end? Like, I know the question's kind of irrelevant, but I think it'd be a good, I don't know, just curious to hear your insight on that.
It's really funny. I've had a lot of people call me on this, because people have been calling me Peter Schiff, because I've always been like the doom and gloom guy. And, let me, on almost every podcast I've done over the last 2 years, I basically have been saying, hey, real estate's a 7-year cycle. And if you go back almost to the day, by the way, and if you look at the cycle, we have a fiat money system as well, which means money made out of nothing.
Yeah.
But every cycle over the last 100 years has not been a natural decline in supply and demand. It has been an artificial boogeyman event. Okay.
Really?
And I'm not going to go down the conspiracy, path, but I'm going to say that it has come out of left field. And so all of it, I've said, hey, you could have a correction, a downturn, or a systematic crash. And a lot of the podcasts I've said, I predict more of a systematic crash. And so that's, we're seeing it, coronavirus. Before it was, the mortgage crisis. Before that, it was 9/11, the September 11th, situation in 2001. We've had the missile crisis, the Cuban Missile Crisis, the oil embargo, the stuff that we had going on in Iran. So it's all come out of left field. And so I don't think this is any different. Now, everybody is, how this thing came, and you got China and that. I've got my own perspective on it. But in reality, it's like, okay, this is another cycle change, and let's go back into history of how to make money off of it. And, again, this is a great time to be in the market when everybody's on the sidelines. And especially there are buyers out there, and this is a great time to be virtual wholesaling, taking down good deals if you can find them, but preferably wait and hold and be preparing. We call it the 3 Ps. Protect what you have, pivot. So start pivoting for the opportunity, and then profit. And I think this is going to be one of the biggest opportunities. I'm preparing. We're actually already starting, starting the fundraising for this next uptick in real estate, because wow. I think what we're going to see is we're going to see appreciation of property starting in about 24 months. There's going to be a drop, and then starting in about 24 months, we will see a massive appreciation. If you go to China, you go to other countries like India, almost everywhere in the world, houses and properties are almost untouchable, right? If you're not part of the super rich, you don't even own property. In the United States, I'll give you a statistic, 65% of all, people, households have been able to afford real estate, the median home price. And historically, it's been like 45, 47%. So more people in the last few years have been able to afford a property. And I think that that's going to drop. I think the number of people that are going to be able to afford a home to buy is going to substantially go down because of the massive appreciation, and the deflation of the dollar. So what happens is your dollar, when they print more money, your dollar becomes almost worthless, right? Yeah. So imagine going in, if we look at the last cycle, right, from 2008, you could buy a gallon of milk for what? $1, right? And today it's closer to like $4. Well, imagine a gallon of milk today, $4, and in 10 years, it's $15, right? So our money is worth a lot less. That's what happens when they print money, but real estate skyrockets. So that's when we're going to want to be owning real estate. And I think all of us should be preparing. This is going to be an awesome time to be preparing for that.
Wow. Yeah, I know. Preparation is key. I was just reading, I just started reading, Charlie Munger's, almanac, business almanac book. And he writes there, basically, preparation is the reason that they're successful, right? Buffett and Munger, their strategy is they pretty much buy about 2 companies a year or something like this, or very few companies is the answer. And basically, but they prepare all year. Okay, these are very smart guys, like the smartest in the world. They read and prepare and study all year just to buy two companies, right? I mean, you're talking billions here, but with Gary, I think I kind of heard a variation of that. Like, prepare all this time, right? Keep wholesaling, keep being a realtor, a broker, agent, whatever you're doing, but prepare and study about this, learn, so that when it gets close, when inventory is high, you can capitalize, right? You raise the money, or you can partner with the right people, or you can, lend them, whatever, whatever the situation is for you. And I think that's beautiful. That's a beautiful answer. I think the listeners can get a ton of value out of that. I mean, it's almost like a little bit of comfort at the end of the turmoil, because you got to keep working, right? I understand maybe you take a week off here and there because of all this craziness, but at the end of the day, keep working, right? Like, keep working, building money, protect, pivot, and profit. Love that. Love the 3 Ps.
Yeah. We're a lot of us, we're doubling up. This is we're seeing, 2 months ago, people weren't as motivated. People are more motivated today. The people that typically have vacant houses or burned out landlords, if they're taking on, if they've got renters that are not paying, those are the more motivated sellers. We're going to continue to see that, while we're also seeing a lot of people that were our competition are now gone. So this is a great time. If you've got a wholesaling business, or if you're not even doing it yet, this is a great time. It's a simple business model. And as well, over the next 6 to 9 months, as you're making money, this is a great time to be preparing for buying. That's really, I can't even say it. Imagine if you've got, a lot of us as real estate investors, we've been searching. Let's say we got one house. You got 100 people trying to buy that one house. Well, what happens when you got 10 people, not 100, 10 people trying to buy 100 houses? There's massive inventory, a lot less competition. That's when we want to buy. Charlie Munger, you were talking about Warren Buffett. One of my favorite statements from him is, he said, what's the success formula for Warren Buffett and Berkshire Hathaway? He says it's KISS. Keep it simple, stupid.
Yeah.
Nothing's new under the sun in real estate. It's a lot of people, they're trying to figure out the crystal ball. No, everything, just go back and look at the previous cycles, right? There's more inventory. The sellers have less options. They're more motivated. There's going to be deals like crazy, including sellers with owner financing, right? So I would be learning that. I'd be learning how to raise a little bit of money and preparing. That's what we do over the next 6 to 9 months in preparation. And in the interim, double up on marketing and make sure you're going back to the old leads, right? If you don't have a system, get a system to do that.
Yeah.
If you don't have something, you can always check out realestateinvestor.com. If you don't have a phone team to work those leads and you're doing it, get out of that. Get somebody like realestateinvestor.com, our team, or hire somebody. I always say, if you're doing $5 an hour work, you're going to have a $5 bank account. So you want to be, what should we all be doing? We should have the time to be talking to sellers in their house or over the phone. We shouldn't be actually doing all the work. Right?
Yeah.
I would say, imagine if you said this yesterday. I shared this with somebody. I said, somebody said, if you just don't have the money or you're fairly new, shouldn't you do it yourself? And I said, imagine this. Imagine if you wanted to get into the pizza business and you wanted to own a pizza delivery company and a store. Imagine if you were to start a business to do that, would you actually be the guy that would be holding the sign out in front as the advertising? And then when they came in, would you take their order? Then would you go in the back and bake the pizza, right? And if you were delivering pizza, then you'd have to get in your car and then go out and deliver it. It's insanity, right? No, you have to hire and leverage other people. So you find somebody that can do $5 to $10 an hour work so that you can make money as a return on investment, right? Each of us should be making $200 to $1,000 an hour. And so you want to get really good at just leveraging somebody else. Yeah. So if you don't have that, you want to put that in place and double up on marketing and then prepare for this next cycle turn.
Yes, love it. That's a very simple formula too, how you can capitalize on all this. This is coming from a guy who's been through it. He's done hundreds and hundreds and thousands of deals, sent 15 pieces of mail. This is someone who's lived through it. You've bought, you've lended, you've pretty much done every part of the business. And Gary, so one last kind of question before we wrap this thing up here. Gary, what's kind of for you yourself? What is the next big thing that you're kind of working on, or something you're excited about? I heard you mention like the fund and stuff, but what is kind of Gary excited about moving forward in the midst of all this?
Yeah, that's a great question. I mean, I've been loving the merging of the business. This is the first time that we've actually gone and done the acquisition merging process and bringing in another company and another team and like making it work. I've been really enjoying that. I have this last year, one of the things that I implemented was just I did a 5-10-3 kind of model, which is I wake up at 5, I start my day at 10, so that gives me 5 personal hours a day, and then I do 3. In 3 businesses, I work 3 hours a day as a CEO, and so I've been really enjoying that. In terms of what's the next step, I'm doing exactly what everybody else that I'm sharing with everybody, and that is really starting to pivot our model. I unloaded everything, by the way. We unloaded about 18 months ago. We pretty much got out of everything except one rental property. We've been gearing up for this.
Yeah.
So
it's funny. I actually followed I don't know if you remember, we spoke about that, and I have all of them except for one that I'm, should be selling in the next week or so. But,
yeah. And I've been investing. I do first position loans. I've been doing a ton of lending. So I've been doing wholesaling and a lot of lending and some creative deals.
What market do you live if maybe a listener is interested?
Yeah, mostly the West Coast. The lending, super low loan to value. I've been planning for this, so it's kind of like my evaluation criteria has been, hey, if we had the worst depression and we had an earthquake and destroyed the house, would I still want the property? And I've been investing in those deals. So picked up recently it was a triplex that we invested. It was $500,000, a little less than $500,000, and the purchase price was closer to $850. So I'm pretty high, so safe assets. This thing had no work. It was already performing, and those are the types of things. Mostly California.
Okay.
Mostly California. I might open it up once the market turns. We'll probably start doing rehab lending again.
Oh, I love that. Love that. And Gary, so how can people, how else can people follow you? We got realestateinvestor.com. Tell us like how they can, or subscribe to your podcast, or maybe, I don't know if I know you're on Instagram for a little while or on YouTube for a little while. So what have you been focusing on?
I know. I've been trying to do the social media thing, but it's like, that 5-10-3 rule. It's really hard to like play on social media.
Yeah.
But I'll tell you, Real Estate Investor Beacon, that's our public Facebook group. Robert and I are posting there like every day. I'm interviewing a couple of people, noteworthy people and friends of ours, impactful people in the business. That's a great place to go to find out more about us and just get great information. Realestateinvestor.com. If you need help with marketing, if you need a follow-up system, if you need a phone team, I mean, I don't know anybody that can do the job better and for less money and reliable results. And then I do have a podcast called realestateinvestor.com Huddle. So, all that stuff.
Have to check it out. Some powerful, powerful stuff what Gary talks about, and his systems and stuff are some very powerful things as well. Whether you're new or whether you have a team already or you're doing, 200 deals or one deal, definitely, at least give Gary a shout, go on the website, check them out, reach out to them and see how they can help. So, Gary, I appreciate you coming on, man. This has been so fun. You opened my mind and my eyes to so many different statistics and, economic factors I wasn't even, really looking at. So that's crazy, man, that some of the stuff you said. So I really appreciate you sharing that.
Yeah, no, it's been great. Some people call me the nutty professor, and I'm starting to get that title, so it's pretty awesome.
Yeah. I can see it.
Awesome.
But guys, also Gary, I remember before you had something that maybe you'd want to give for free to the audience. Is there like a link or something, or maybe you give me the link and I can put it on the show notes?
Yeah, you know what? That's a great point. For anybody, I actually presented on. This is right before coronavirus. I was in front of 400 people and I was asked to deliver an hour and a half presentation on how to build a business that works for you. It was really how to build a business that gives you the lifestyle that you want, and get out of what I would consider more slavery to a business. So many of us get into real estate for lifestyle and for financial freedom and just get trapped. And so I spoke and I got a lot of really good feedback, but I put together a bunch of free stuff on marketing, on how to get things done really fast. There's all kinds of tools in there, and I'll just give you can actually text message. It's a phone number. You're not going to get marketed to, so we're not going to be like hammering you. It was really just given out in an event in St. Louis. But that phone number is 925-320-0575. And all you have to do is you can just text to that number and put in free, F-R-E-E. Just put that into the text, into the subject line, what have you. And dial that number 925-320-0575, or text it, I mean. And within a couple of minutes, you'll actually get a link to all of our stuff. And it's pretty good. There's a scorecard that I put together. A lot of people have no idea on how to put together what their return on investment and, how many leads they need for a deal and the costs. And this will take all the mystery. If they want to make $1 million this next year and they're in a particular market, it'll actually show them all the math. Wow. all the way down to the number of times they got to dial the phone to have enough people to connect to, and enough appointments to go make some money. And
guys, that is like, I mean, if you're in this business and you're listening to this podcast, you probably have already a little experience, so that's valuable. But if you don't know how, that is extremely valuable. And Gary's gave it for free. So text that number. It's 925-320-0575, right? What I got here?
Yep, that is correct.
I'll also put it on the show notes there. And yeah, so text that, get that, reach out to Gary. And if you're watching this, or if you're listening to this on iTunes, we'll also have this up on my YouTube channel, Raul Bolufe, or on the website, raulbolufe.com. It'll be up there. Feel free to check it out there. And any last words, Gary, before we wrap this thing up?
That is it. I love the Henry Ford statement, so I'll leave it with everybody. If you believe you can, or if you believe you can't, you are correct. So I always think that this is not a time to panic. This is going to be an absolutely phenomenal time for real estate investors and agents. And don't freeze up, and stay safe.
Love it. I love it. All right. Thank you guys for listening. Gary, appreciate you, man.
Awesome, man. Have a great one. And everybody else.
Peace.